What's up, y'all? Let's hop in another lesson here. Let's do a prayer. Ground as well. Okay. Dear God, we pray that this information, that this technology, that this learning guides us into creating a future of deeper connection, interconnectedness, harmony, love, and respect and sacredness towards the planet. Dear God, may you be with us in this teaching, in this sharing of knowledge, in this co-creation of the world. May you humble us and give us confidence to be. Thank you, God. We talked about a Crypto Masterclass with 19 keys. So today we're going to talk about basic understanding of cryptocurrency and blockchain. We're going to explore that. We're going to go into trajectory ideas and crypto investment ideas for kind of quick money. We're going to talk about wealth building, and then we're going to talk about just overall crypto, decentralization, independence, and why it's a future, right? So crypto was born after the 2009 financial crash, right? So it was born as an alternative, a solution for why that crash happened. It's basically just pure innovation happening. And so there's quotes that say one will be forced into crypto whether you like it or not. And this is what the call goes into, right? Cryptocurrency is the future of money. Ignoring crypto is just a waste of time because crypto is wealth building. It is wealth building, right? It is real wealth. And what that means is it's good. That's because crypto is wealthy because there's a blockchain technology. And this blockchain technology is essential for validation and security, right? And it also prevents manipulation. Money needs to be backed to be valid. That's why we have banks. That's why we have financial institutions and third parties which allow us to verify and when we send and receive money, right? So when you're on Zelle, you're still verifying. You're still using, okay, is this the right person to send money to? Does the bank allow it? Do I have enough funds? Is this too much of transfer of funds? Even banks are knowing how much you're sending, to who you're sending, and what you're sending for, right? They even have like the shop you bought at, and they have all this information on you, and that's actually banks. That data is how they generate their most income. The data that they sell to government, to marketing agencies, and to corporations is the data of our financial transactions. So those are valuable for banks, and that's how they run. So, when we have the blockchain, obviously it's going to look different, but there are some other ways of transferring funds which crypto and blockchain technology really allows, which is scary and interesting because when you have let's say really rich people doing hidden trades, it can be scary. But when you have, people like every day, Bobs and Bees who are fucking going at it, and black market stuff, that's cheeky. Okay. Bitcoin is a finite amount. So when we're talking about Bitcoin, there's a 21 million finite amount. And so that's going to be done by 2141, I believe, which is about 120 years, 115, 16 years, right? So if Bitcoin's going to be maxed at 116 years, that means there is this room. There's still growth opportunity. So that makes it a little bit more attractive, right? And it doesn't deflate. Making it deflationary in my ChatGPT summarized in my notes. That's because it has a finite amount. So we're always going to be going in accordance of this finite amount, right? And we kind of have a feeling of how many Bitcoin is going to be mined per year because we know the power, and we have a prediction of by 2141 there will be 21 million coins, and that will be maxed, and then it'll fucking subdivide, and then Bitcoins will have less Bitcoin, but it'll be more valuable. So currently in our government, we can print unlimited money, such as in COVID, I think with the stimulus check, which was a digital asset, which was a digital currency of national currency, right? It wasn't like Bitcoin and worldwide global currency. It was national currency. The US dollar was converted into stimulus check. There was no cash. It's just a name on the internet that says, okay, here you go. There's $1,000, and the banks transferred that, and then the money was exploded into the world, right? And that devalued the dollar, right? And now, my God, the burger's $5 more than it was 2 years ago, 3 years ago. So, money printing devalues the dollar, but the thing is, Bitcoin you can't print. So, you can't print unlimited Bitcoin when you need it. It's just there. So that it might be a little more reliable in this sense. I'm still getting my head around that. Blockchain verifies transactions, ensuring transparency and decentralization. Once you make a transaction, it goes onto the ledger, right? And when it's on this ledger, a bunch of people who earn Bitcoin from verifying your transactions on the blockchain, on the Bitcoin blockchain. Yeah, right? And so there's transparency all on the internet. So Bitcoin, anyone can see it. So there's agencies who actually analyze the blockchain transactions, and they collect data, and they sell that to corporations. So that's kind of another way they're learning. But there's also apps and agencies which allow zero trackability using the same blockchain. I don't know exactly the interaction with that, but that's interesting. And then there's decentralization because there's a bunch of nodes, right? But I recently heard from my friend Liam that there's a company that owns 51% of all of like Bitcoin or something. I don't know, a few companies. So they can like fuck with the stock. Peer-to-peer network, moving the need for third parties. Peer-to-peer, my wallet to your wallet, not through my wallet, through the bank to your wallet in the bank. No. So restoring financial power to the people. And this is the this is the main argument for Bitcoin and blockchain. So wealth is different in the crypto space. It's supply and demand is good, right? Because we know the limited supply, and thus that allows the demand to come out. And so there's this good relationship with supply and demand, which ultimately makes money go up, right? Up in value with a good, healthy supply and demand, apparently. So Bitcoin crypto create an economic shift. Decentralized, transparent, peer-to-peer. These are three things that are very key to self-empowerment and organizing. Mass adoption is happening right now. And these videos were in 2020 to 2021. And that means like now we have Trump, who made a whole central government and just added XRP and is adding fucking Bitcoin and probably Ethereum to the government like funding. So it's still early. Like, it just got added. This is just a new part in the government. Like, diving in still now is fucking amazing. OCC's role in crypto adoption. The OCC now allows banks to offer crypto services. The OCC is the Office of the Comptroller of the Currency. They work, I think, with the government. Banks are already facilitating crypto trades and integrating digital payments. The world we're entering in the digital age, we already have been. Life has been getting more decentralized through the years since like the 2010s with Airbnb and Turo. We have already been able to give money to each other. However, still there's this centralized authority, right? But blockchain limits that. Bitcoin eliminates that third party. There's no centralized authority with transactions. And thus, what does that bring? What innovation can that bring? Holy mother God! Let's keep going. The future is about innovation, not resistance. I kind of agree, but there's resistance is good. In some ways, it creates friction. Woo! Let's talk about asymmetric betting from Chris Cole. So he takes $1,000 per year, just $1,000 from his savings. He has it, and he finds 10 high potential penny stocks, or crypto versions, and he invests $100 in these penny stocks. Right? And to spot a good penny stock, the price is under $5 per token, right? It's lost 70% of value in the last year. And it has a potential for a bounce back. And thus the return rate is high because there's a historical price spikes, right? And there's a recent volume increase. So that potentially the volume increase indicates that there's new market interest and that might blow up. So this is a wealth strategy. So basically, what he does is he puts $100 into 10 small cap coins with potential small investment, high return potential, right? He makes sure he analyzes the interoperability. How well the coin interacts with other cryptos and blockchains. Can you sell, trade, do, transfer, easy, dance? How scalability is it? Can the coin handle a high volume of transactions? Can it handle quick pump ups? Right? That's key. In order to make money for high value, you need to be able to adapt and scale fast, right? Because people are going to be getting rich fast. FAT protocol. Is the protocol strong, legitimate, valuable? This includes the database, the transactions, the contracts, the infrastructure of this coin, of this operability. How is the FAT protocol? Is it strong? Is it legitimate? Is it valuable? Can you see? Is it transparent? So then I had an idea for the Nirvana 400 cooperation, where we each research a coin and find strong fundamentals, and we pool a communal fund and divest into each of those and buy after bust and before boom. So Bitcoin is digital gold, right? And it can not be copied or manipulated like fiat. Bitcoin is not controlled by government or corporations. And so let's talk about cash, right? Cash is invaluable. So Chris Cole, they say it's devaluating all the time, right? Especially now, I believe cash is devaluating faster and there's not really potentially a need for cash. Now this just came to me now because if we're to pay everyone back in cash, it would take fucking years. But if those countries who need to pay back invest into Bitcoin and that blows up, then they'll be able to easily pay back other motherfuckers. And, yes. So, the rich people don't hold cash, they hold assets. They hold money in the stock market. They hold, like, physical assets. Not liabilities, assets. Banks hold 20 trillion in cash. Stock markets holds 50 trillion in investments. Right? So, holding cash is a diminishing asset. Bitcoin is an asset, so holding Bitcoin is using your money for gain. Create your own bank strategy with Bitcoin. This is interesting. So store wealth in BTC like a personal bank. So you have BTC as your main value, right? And this BTC is yours to hold, trade, and sell. It's your own bank. Right? You're the owner. You're the one who verifies and all that stuff. I mean, you're the one who decides how much you get to buy and sell. Your money is protected from inflation and devaluation, and you can grow your wealth through strategic crypto investments. It's pretty fucking cool if you have BTC as your main way to make money. Financial independence means not relying on banks. Bitcoin is key to find the future of digital currency. China is is the first to launch fiat currency and for the digital yuan. COVID-19 accelerated the need for digital financial systems because we can see how unpredictable life can get. So we need some sort of ease of digital financial trading. China, cashless society. China already launched a government-backed digital yuan. Central bank digital currencies, digital versions of national currencies, like I was talking about earlier with the stimulus check. This internet is a bridge. It's connected communication and finance and trade. Everything is evolving. We are young. This is a point of innovation. Let's get into this, right? So there's some other strategies for holding and trading NFTs. One, you can go with the main boys. So Bitcoin, Ethereum, as core holdings. You can have those as core holdings, maybe 50, 60%, 70% of your core holdings, that you can trust those as building. And then you can invest maybe 5 to 10% in altcoins with long-term potential, staking coins to earn passive income. You can stake your Ethereum to earn passive income there, locking those tokens in, learning the APY, which I don't know what that means, but that's what happens. Equal distribution across assets, asymmetric betting model, so you can just have equal distribution among assets and then just have Bitcoin at the top, so you have like this formation down. How staking works. Ethereum moved from a proof of work to a proof of stake. You can now stake ETH and earn dividends. I don't know why. I need to learn more about that. And you can earn 2 to 10% of annual returns with these dividends. So crypto dividends is probably something to dive into. It's probably young. So let's talk about just how this applies to my life, right? The friction between vision and present reality and analyzing crypto and creating wealth. All right. Recognize where you are today. And then vision where you want to be. Bridge that gap and that friction through a strategic action and strategy, and you will automatically rise. Friction-wise. They will need to meet. You will need to rise. And then when you execute consistently, wealth is long game, right? Learn from those already winning, right? Bitcoin is not just currency, it's a financial revolution. Thank you.